My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Hey folks, welcome back. Today our special guest is John Pugh, who is zooming in from Tampa, Florida. John is a very experienced real estate investor with a very interesting backstory. So he's a real estate investor. He's one of those smart guys, graduated from MIT, and athletic as well. So John is a former professional basketball player. He's got a couple inches on me. I think he's 6'10". I'm 5'8" on a good day. So today we're going to be talking about John's real estate journey, what he does, what Pew Management is all about, because they do something really, really interesting, and that is connecting capital with deals, and they've got a lot of experience working with family offices. So John, welcome to the show. Great to have you.
Thanks for having me, Dave. Enjoyed being here. Thanks for having me on.
My pleasure. So let's zoom out. Give us the big 30,000 foot perspective of what you do when it comes to real estate and investing and working with family offices. And I even forgot to mention you're a podcast host as well. Just give us a little snapshot of what you're up to these days at Focus.
Absolutely. Pew Management, we're a family office capital partner. So we are finding, sourcing deals and investment opportunities for our family office partners, helping manage those assets, and really kind of connecting the right deals to the right capital. So my experience, my background, worked on Wall Street for many years, to transition into real estate development. So I've also been on the execution side of development investment projects, and then most recently have started to kind of more focus on kind of connecting those investor relationships that we have with high net worth individuals as well as family offices. So that's a big piece of what we focus on at Pew Management, and really operating across a variety of verticals, but mostly focused on the multifamily and industrial space today. So that's what we're doing. We're seeing a lot of distressed opportunities, special kind of opportunities, which have begun to surface given some of the challenging times with interest rates and some different overbuilding in certain areas and things. So we're finding some new opportunities today in the market that we're pretty excited about.
So John, are you much into development these days, or more looking for projects that are already built out?
Still doing some development projects. We're doing a multifamily development project down here in the Tampa area, and then in addition to that, we are looking for partners. So really good operators, developers, sponsors, however you may refer to them, who are experienced and know the business, that we can partner with them as capital partners, and provide some of our experience and lessons learned as well, but really come in and provide the balance sheet and some of the financial backing to get deals done. So that's become more of a focus, but we still have some development projects that we're working on as well. So
okay, very, very interesting. So John, I mean, for a lot of capital raisers out there, syndicators, fund managers, dialing into family offices is like an investor's wet dream. Excuse the crudeness there, but it's just like the ultimate for a lot of people. How did you kind of crack the code on that? How did you get started with working with family offices?
Well, I think one of the things that I did was I worked for a large institutional group that, where I learned the business of investment and development in the real estate space. So that gave me some amount of credibility with certain groups. I then connected with, decided to go out on my own about 10 years ago now. So it's 10-year anniversary this year, which is pretty exciting.
Congratulations.
So, thank you. So that, not long after I went out on my own, I ended up connecting with a family member who we were introduced through kind of a common associate colleague that introduced us to, we were both involved with a nonprofit board,
Hmm.
which was investing in sustainable development of downtowns, things like that. So we had some common interests, we had shared some common goals, and got to know each other a little bit better, and turned out that we wanted to work together. So I think, one of the things that I think I always say is really important is to look to, find people that you have something in common with, whether it be strategically, from a business perspective, personally, things that you have things in common with. You clearly have to have aligned similar goals and interests, and really building a long-term relationship as opposed to more transactional relationship. Our
Yeah.
business is very transactional, and that's just part of the nature of the business. But when you're dealing with family offices, they're less interested in a transactional relationship and more interested in a relationship where you clearly can provide value to them over a long period of time, and recognize that the long-term relationship is more important than short-term profits. So there has been some amount of, I have to some extent been in a position where I probably gave up some short-term upside, just to build the relationships that I've been able to build. And but really, it's a matter of identifying people that you have things in common with, and building a relationship over a long period of time, and not necessarily seeking to monetize that relationship too quickly,
Right.
because these types of people and groups, they have people constantly trying to sell them something. So
For sure.
if you are if you are looking to be an ally and a trusted partner more than someone who's going to sell them something, they'll understand that and appreciate that. And that to me is kind of a mindset shift as well.
Hmm.
It's not just saying, "Hey, I want to go meet family offices." It's saying, this is something that's going to be good for everybody. And I don't want to work with every family office, right? Like, there's plenty of groups that I don't necessarily align with, and that's
Hmm.
okay. But that's the nature of family offices, right? They're led by individuals, and everybody's different, and everyone has a different philosophy on life and investing. And I think once you kind of get to know yourself and really understand what your interests are long term, it really helps to clarify and connect with people on a more deep level. And that's a pretty important piece.
So it sounds like when you're starting a new relationship with the family office, you're trying to provide value first. You're not just out there
Absolutely. Absolutely.
look. So in your case, in your example,
Yeah.
what are some of the ways that you're able to provide value to a family office before you actually start working
Yeah.
together?
Yeah. That's a great question. I think, a good example is the first thing that I did, right? So I met this particular individual that I mentioned a moment ago, got to know each other, recognized we had some common interests and complementary skill sets, and kind of recognized we might be good to work together. Agreed that if we found a deal, we'd look at it together. So I basically went out and spent, I don't know, maybe 18 months before I found a deal that particular family office thought was worth investing in. I presented it as, "Hey, we can partner together. I'll bring the deal, my experience as a development manager and architect, and you bring your balance sheet and your experience as an architect, and kind of some of the other pieces that they had." And it made sense, right? So it
Hmm.
was really exactly what you just said. It's offering some amount of value up front just to demonstrate that you're interested in having a relationship, right? It's kind of like, you take someone out to dinner and you have a nice time, you get to know people, you don't necessarily rush to consummate the marriage, right? So I think it's really important. And I think a lot of people, unfortunately, a lot of people today kind of are trying to rush to the end point where there's a transaction, and
Yeah.
they're missing the fact, like, especially, it's another point that's very connected to being an entrepreneur. Like, you need to look for allies, right? You need to look for allies, people that you can work together with over a long period of time, not just people you can do one transaction with. Because if it's
Right.
like that, that'll just turn into lots and lots and lots of smaller transactions. I think it allows you, one of the reasons I've prioritized it is this allowed me to scale, right? And I haven't had to,
Definitely.
so I was able to go out and do a $20 million project where I didn't have the balance sheet to go do that on my own. right? So that was a big piece of that. And my background's in development, so you need to have a meaningful amount of capital behind you. Otherwise, you're not going to be doing much of significant size.
Yeah,
So,
so sounds to me it's like having that track record. You already had the experience of years working in development, then
mhm.
having some sort of a personal connection with that person. It's not just all business. You
Yep,
connected in that case through a charity that you're both part of. And then it's
exactly.
just that persistence of is over the 18 months. I'm guessing that you showed them more than one deal, one opportunity. It
That's
just
right.
it took a
That's
while
right.
before they found the one that fit. And
Yeah,
then
yeah.
you say you were willing to take perhaps a lower percentage than you might have otherwise just to get your foot in the door and really have proof of concept with that partner first.
Yeah, I mean, I think what you just said, one of the things that I didn't quite say, but you said it well just a second ago, is that like I didn't over negotiate, right? Like I'm not
Mm-hmm.
looking to squeeze every last penny I can out of the relationship because you recognize that it's mutually beneficial relationship and you're not, I've had deals, people I've done deals with where they negotiate they squeeze you all the way down to the very last penny.
Yeah.
And you know what? Like life's too short. I don't want to deal with
Yeah.
people like that. I don't want people to think I'm going to be like that. So you got to give a little bit to get a little bit, and it's a very good motto or way to work and operate. Just be aware of how would you feel if somebody tried to over negotiate you, right?
Well,
So
It's happened to all of us, hasn't it? I mean,
absolutely,
we hate that when that happens. No, that's
yeah.
so. It sounds to me, John, like there's really like two main things that you're focused on these days. One is looking for
Hmm.
good deals, good opportunities,
Hmm.
good partners that have deals that you
Sure.
can sink your teeth into. And then the other
Hmm.
side of the coin is raising capital, making those
Hmm.
connections, finding other family offices or high income, high net worth people.
Hmm.
These days, a lot of capital raisers are struggling to raise capital. Other
Yeah.
people are struggling more on the finding deals side of things.
Hmm. Hmm.
Which one are there, or maybe you got both of them completely dialed in, or which one are you finding a little bit more challenging these days? Hey there, if you're a capital raiser, a syndicator, or a fund manager, and you're looking for a steady flow of incoming accredited investor leads, then go ahead, grab a free copy of my new book, How to Get 20 Accredited Investor Meetings Every Month Without Cold Calling, Networking, or Chasing People. You can get that at 20accreditedinvestorsbook.com. Again, that's the number 20accreditedinvestorsbook.com.
Oh yeah, raising capital for deals is much more challenging. I think one of the reasons I'm partnered with two of the family offices that I'm working with is because they believe in the long-term value of being in real estate.
Mm-hmm.
They're not looking for a quick buck, and because there is a challenge raising capital, raising equity. There are opportunities that were not available 3, 4, 5 years ago for groups with a significant balance sheet to come in and write a check, whether it be in a preferred equity position or a co-GP position where that might not have been available previously. So we're looking for deals that are maybe having trouble getting capitalized, where we can come in, provide some of the balance sheet to support the deal in that way, and the loan, the debt, but also taking a position that makes sense for everybody, right? So some of these deals. Some of them are broken deals. So I was just talking to someone at lunch a moment ago, and he was
Mm-hmm.
telling me about a deal where they were closing in 2 days, and the equity walked away from the table.
Oh man.
And
Wow.
this was a couple hundred unit deal, apartment deal in this general area. And he was saying how they need somebody to come in and potentially step in as the equity provider, partner, co-GP there. And so that's the kind of deal that's popping up that wasn't available previously. And if you're aligned with the right capital sources, family offices, you'll have the opportunity to step in and provide some value for both
Well,
the
40,
existing
40 hours
sponsor
is
and
48 hours is pretty short, short
I
notice.
know. Is that
My goodness.
unbelievable? Yeah,
Yeah.
that's pretty messed up. So they're in a tough situation, but these sorts of things are happening
Yeah.
kind of up and down the East Coast and the country, and there's other groups that are that are really good sponsors that have done a nice job building a great portfolio, but maybe they're short on equity and they've got a good deal and the deal's gonna be cash flow positive pretty quickly, et cetera. But they're not able to get out of the ground because they're overstretched. So yeah, so there's a lot of these different situations that have started to occur, and it just creates more opportunity and value for those that are well capitalized. So that's really a big part of the focus today. Not necessarily capitalizing my own brand new ground up deals because I think, as we just said, that's challenging, but finding special situations where we can step in and provide value. So,
Yeah, that's smart. Speaking of smart, I was poking around, checking out your website, taking a little look on what you guys are doing.
yeah.
One thing that I noticed that you're doing very,
Mhm.
very intelligently is leveraging your podcast. And it looks like you're using it to kind of connect with the exact kind of people that
Yeah.
that you'd like to meet. So tell me a little bit about your podcast and
Sure.
how you've been leveraging that.
Sure. So I have a newsletter. It's called The Lineup. It's on Substack and LinkedIn. And Private Capital Perspectives is a podcast that we recently released. We've been doing Breaking New Ground for a while, which was speaking with technology, prop tech, new kind of innovations. And we've recently kind of shifted over to Private Capital Perspectives, which is where we speak to family offices, private investors, middle market groups that are either managing family offices or funds, and they're looking to deploy capital. So we're having conversations about just what we're talking about now, like where are the opportunities in the market that we can all capitalize on and do well on, and where are some of the things that people might want to avoid, and what's working and what's not working is really kind of a big piece because there's not a whole lot of conversation in that kind of middle market.
Yeah.
So trying to be a part of that and add some value and like you said, connect with some people that are potential partners or investors that are looking for opportunities in our space. And there's a lot of money that was allocated to real estate in 21, 22. And there's a lot of money sitting on the sidelines waiting for deals. So we're just trying to
Hmm.
find ways to connect that money to good projects and good sponsors. And I think that to me is a priority. And I love doing it. It's fun to talk to people, interesting people, and share what I'm hearing, sharing perspectives, and hearing what people are up to. So that's the focus there. Private Capital Perspectives is the podcast, and we're currently live on the lineup, and we're going to be publishing more real soon. So. Yeah.
Awesome. Well,
Yeah.
John, hey, congratulations on 10 years in business. That is
Thank you, sir.
a wonderful milestone. You've made
Absolutely.
it through some rocky times the last few years as everybody's
Yeah.
gone through. You've got it dialed in when it comes to connecting with the exact kind of people that you want to work with as financial partners, as well as, it sounds like things are going well with the sourcing deals as well. So that's
Mm.
great. And if people want to connect with you and find out more about John Pugh, where should they go?
Sure, you can go to my website, pewmgmt.com. It's PUGHMGMT.com. It's short for Pew Management, it's the name of my company. And would love to see you there. Reach out anytime.
Perfect. John, thanks for being on the show. And everybody, thanks for tuning in. We will see you on the next one. Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com.